The economy has become a big talking point for politicians, with Democrats saying that the economy is the strongest we've ever seen.
We have created 16 million new jobs.
While Republicans say that our economy is a ticking time bomb.
I gave Harris and Biden an economic miracle, and they quickly turned it into an economic nightmare.
Now, I'm not here to talk politics. I'm here to talk the economy. More specific, I want to talk about what's going on in the economy really, and if the economy is in a good state, a bad state, if it's growing, if it's shrinking, breaking down three different parts. Number one is I want to talk about what's going on with the job market. What are the changes that we're seeing happen there? Number two, what's going on with spending, more particularly consumer spending in our economy? Is this driving more growth in the economy? And number three, are we seeing growth in the economy? Are we seeing growth in businesses, or are we seeing the shrink? And I'm going to make this as unbiased as possible. That way we can get a real picture of what's happening in our economy to help you prepare for whatever might be coming in the future. So let me start by talking about the job market, and more particularly, let me focus in on how unemployment has been changing over the last few years. But first, I want to give a shout out to our sponsor, LMNT, because 2024 has been a big year for me to really work on my health. I've been trying to do more running, doing more exercise, and along with that, I've been trying to get more hydrated. And in the beginning of this year, I bought a big water bottle, and I was drinking that, and I realized I just kept getting more and more thirsty. Then I realized I was missing salt from my diet. That's when I came across LMNT. Yes, this is something that I use. They are a 0-calorie electrolyte drink. They have 0 artificial colors or sugars added to it. The way it works is you just mix it into a glass of water like this. You stir it up, and then you drink it, and it tastes great because it helps your body balance the amount of sodium that you have in your body. So if you're living an active lifestyle, or if you keep a low-carb diet, you might want to try out LMNT to see how it makes you feel, because if you don't have a good sodium balance, you can feel more fatigued, more brain fog, more tired, and just headaches. You don't feel as good. So give it a shot. It might help you feel a little bit better. And the best part of all is that because you're watching Minority Mindset, if you use my link down in the description below and you get any drink mix, LMNT is going to give you a free sample pack with 8 different flavors. That way you can try out different LMNT flavors and find the best one for you. So if you want to learn more and see how you can get hydrated with LMNT, I got the link to how you can do that down in the description below. Back in 2019, the average unemployment was 3.6%. 2020, the pandemic hit and the world went nuts. We reached a high unemployment of almost 15%, but we averaged at 6.7% reported unemployment in 2020. In 2021, the average unemployment was at 3.9%. In 2022, the average unemployment was 3.5%. 2023, the average unemployment went up to 3.7%. And right now, at the time of recording this video in 2024, the average unemployment rose to 4.3%. The reason why I wanted to start with this is because you can start to see the unemployment fluctuates. But what we're seeing now is that unemployment has been steadily rising in 2024, and we're reaching numbers that we haven't seen since, well, the pandemic. Now, while some people have been using this number as a way to create headlines saying we have the highest unemployment since the pandemic, it can sound very scary. What I want you to remember is that 4.3% unemployment, while it is higher than what we've seen over the last few years, historically, it is still relatively low unemployment. 4.3% unemployment is not something to lose sleep over, but it is something you want to pay attention to, because it's the trend that's more concerning than this actual number. The trend that unemployment is going up and the rate at which it's increasing more than the actual nominal number right here. Plus, I should also mention the fact that this unemployment number isn't always the most accurate at giving you a full picture of what's happening in the job market, because this does not include people that are underemployed or that have been unemployed long enough to no longer fit into the criteria of this unemployment number, but it gives you a general idea of where to start. But it's not just the unemployment numbers that are interesting in the job market. It's also what's happening with wages. Take a look. This is a chart from the Federal Reserve Bank showing wage growth over the last number of years, and what we can see is that wage growth has pretty steadily been falling since the middle part of 2022, which was when the Federal Reserve Bank begun to raise interest rates. So on one hand, you hear that the inflation rate is falling, which is good news, but at the other hand, you hear that wage growth is also falling, which kind of compensates for that same loss. And then of course in the job market, we have layoffs. Let me read you the headline of a Forbes article that was published in August of 2024. The Great Tech Reset. Unpacking the layoff surge of 2024. Obviously, we've seen a number of tech layoffs in 2024, but we've also seen a lot of non-tech layoffs this year as well. And this shift in the job market is one of the reasons why the Federal Reserve Bank says they want to start cutting interest rates, because they feel that the job market is getting weaker while the inflation rate has been falling. And because of that, the Federal Reserve Bank feels confident that this is now a good time to start cutting interest rates to stimulate the economy. Now, while a lot of this does sound like bad news, I do want to give a little bit of hope at the end of the tunnel, because for the people that have found good careers and have really cemented themselves there, they have seen growth in wages and growth in job stability if they've been able to find those types of careers. This brings me to the second part of the video, which has to do with spending, which is very important because our economic system runs on spending. The more money you spend, the more money somebody else makes. If you walk into Chipotle and you say, give me a bowl and give me the extra guac, that's good for Chipotle. If you walk in and say, just give me a bowl without the extra guac, that's okay, but they would prefer it if you bought the extra guac, because the extra guac will help pay for another employee and maybe more stores. If you walk into Chipotle, you say, how much is a bowl? I can't afford that, and then you walk right out without paying, that's not good for Chipotle, because that means they stop making money. If they stop making money, they can't open more stores. If they can't open more stores, they can't hire more people, and if they're not making money, they might even have to downsize some of their stores, so they start making less money and they have to do more layoffs. That's why spending is so important. But the thing that I want you to pay attention to is, who is spending money in our economy? Now, this might seem like an obvious question, but one of the largest spenders in our economy is the government. And then, of course, we have the non-government spending. And if you really want to understand what's fueling our economy, you have to understand both of these things. So let me start by talking about government spending, because I think that's a little bit quicker to understand. According to the United States Treasury Department, the government has spent around $5.6 trillion already, which is 6% more than last year. What does that mean? That means the government spending is increasing, which is helping to keep the economy continue growing, because the government is spending more money hiring contractors. They're spending more money doing infrastructure. They're spending more money into the economy, injecting this money into the economy to keep the economy moving, which is good for businesses, although there's a cost to this, because of course the government doesn't have the money to continue fueling all this additional spending, because if they did, we wouldn't have this $35 trillion worth of national debt that we have right now. So to fuel this additional growth in spending, what does the government do? They go into debt. They go into debt by either issuing treasuries to people, or they issue treasuries to the Federal Reserve Bank, which means the Federal Reserve Bank works to create money out of thin air, and then it gets lent to the United States government. That's what creates inflation. I'm not talking about that in this video, but just understand that although government spending can be good for the economy, there is a consequence to this government spending, which is, of course, inflation, but I'm gonna kind of avoid that for the purposes of this video so I don't get too sidetracked. But what you want to understand is the government spending is still growing, which means that this continues to contribute to the economy and economic growth. So if we have our economy over here, which is fueled by spending, about a third of our spending in our economic system is fueled by the government, which has been growing, which continues to fuel the economy. Then we have non-government spending, which has kind of been all over the place over the last few months. Back in June, the data said that Americans were running out of money and that Americans are pulling back on their spending because they have no more money to spend. But then came August. And it seemed like things flipped in August, because then the news came out that Americans are spending again. And American spending is growing more rapidly than initially expected. That's why it's a little bit of a mix here, because some months we're seeing growth in spending, some months we're seeing a decline in spending. But I think overall what we understand is that many Americans are starting to feel the pinch of inflation, and they don't have the ability to continue spending more and more money, because many Americans are being tapped out on debt, and they don't have the same resources to continue spending more money because they have less discretionary income. That, I think, is pretty well established, but whether Americans have run out of money or not, that's a little bit of a kind of confusing gray area that a lot of banks are trying to figure out themselves as well. But have no fear. This is where you have a lot of businesses, for example, Lowe's and Home Depot, that are banking on the Federal Reserve Bank to cut interest rates because they think that this is going to fuel more spending. Why? Because when you have lower interest rates, that makes it easier and more attractive for people to borrow money. Now remember, we live in a spending-based economy that doesn't just rely on cash, it relies on credit. And when interest rates go down, that makes credit borrowing even cheaper. So if it's cheaper to borrow debt, then more people will borrow debt. It's kind of like when Macy's has a sale. When Macy's has a sale, more people want to buy their sweaters. When Macy's doesn't have a sale, less people want to buy their sweaters. When debt is cheaper to borrow, more people want to borrow money. And so this is why you have companies like Lowe's and Home Depot saying, we can't wait for the Federal Reserve Bank to start cutting interest rates, because when they start cutting interest rates, more people will do cash out refinances, more people will do a home equity line of credit, and then they're going to be able to use this money to potentially remodel their kitchen or their bathroom or do some other sort of home improvement projects. So you have a lot of companies that are waiting for the Federal Reserve Bank to cut interest rates, which will then fuel, or hopefully fuel, more spending, which would then fuel more growth in the economy. At least that's what people are hoping. Now, the last thing that I want to mention on spending before we move on to growth has to do with this partial confusion here, because one of the things that we've been seeing that may have driven up more growth and spending is over the last number of months, what we've seen is a lot more companies have been pushing more value deals, more discount deals, which we haven't seen since before the pandemic, because a lot of companies, especially the discount companies, have been realizing that people have been getting tight with money. So they've been pushing more of those value menus, and even Walmart came out and said that they've been seeing a growth in sales because more rich people are shopping at Walmart. So take that for what it's worth. And this brings me to the topic of growth and businesses. Now, if we go back to what the Federal Reserve Bank said back in July, they said that the economy was cooling. Now, of course, businesses are what make up the economy because you have to spend money at businesses, and we know that spending is what fuels businesses. But I want to go a little bit deeper into businesses and business growth here, because there's one thing that I want you to pay attention to, especially with businesses when it comes to interest rates, which is debt. And the reason why is because corporations don't get a 30-year fixed rate mortgage like you do when you go to buy a home. Same with commercial landlords. They don't get a 30-year fixed rate mortgage. What they get is a readjusting loan. And nearly every corporation and commercial landlord back in 2020 and 2021, when interest rates were at their lowest levels in the history of time, refinanced their debts. Now, these debt refinances in the corporations and commercial real estate world, these are generally 3, 4, 5 to 7-year loans. And so what we have is we have this big amount of corporate debt that is beginning to readjust in 2024. We have more readjusting in 2025, which if you're a corporation and you borrowed hundreds of millions of dollars at 2, 3, or 4%, now that might be 6, 7, 8, or 9%, which means the cost of you servicing the debt is a whole lot higher, even if you don't have any more debt. But just because the cost of servicing the debt, your debt interest rate is a lot higher because interest rates are a whole lot higher. It's the same with commercial real estate. You have a lot of commercial landlords that refinance their loans at 2, 3, 4%, and are now facing potential 6, 7, 8, or 9% loans on that exact same debt. Now, normally what you would do in these situations is when you have these higher costs, you pass it down to the consumers. I mean, if a business sees higher costs, they raise their prices. If a landlord sees higher prices, they pass it down to the tenants, which is okay in okay times. But what happens when consumers don't have the same ability to spend? Or what happens if you are an office landlord and you don't have a lot of tenants, and your tenants that you do have don't have the ability to pay? This is something that you want to pay attention to, because now at the same time, the Federal Reserve Bank is talking about cutting the interest rates on these debts. So you have a lot of corporations and a lot of commercial landlords that are sitting on the edge of their seats wondering how aggressive the Federal Reserve Bank is going to be with these interest rate cuts, and how many times they're going to cut interest rates, because this can make a big impact on their bottom lines. Because if interest rates get cut aggressively, then maybe their debts aren't as expensive as they thought they were going to be, and it doesn't turn into this big red hole on their financial statements like they might have thought. So we don't know what's going to happen here. What we do know is that corporations and commercial landlords have a lot of debt that's getting ready to readjust. Now, what we do know is that the Federal Reserve Bank wants to cut interest rates. What we don't know is how much and how many times. And so based off of that, that is going to impact how much these commercial landlords, how much these corporations are going to be impacted by the readjustments of these debts. Of course, we'll be keeping you updated on Market Briefs, my free financial newsletter. I got the link to that down in the description. And I'll be working to keep you updated here as well. But those are the things that you want to pay attention to when you're really trying to understand what's happening in the economy. And based off of that, I want to ask you a question. What do you think about the economy? Are we in a good place, an okay place, or a bad place? Let me know down in the comments below. Vice President Kamala Harris says that she wants to raise taxes. More specifically, she wants to raise taxes on certain individuals. She wants to raise taxes on investors, and she wants to raise taxes on corporations. That way she can help fund certain tax breaks and tax deductions. When it comes to your individual taxes, there are 4 main changes that she's proposing. Number 1, buying a house. Number 2,